We'll probably keep these shorter than the 3 or 4 hour things we used to do. Do you know what I mean?
Yeah. Yeah. I mean, that was the early days of the bull run. People couldn't get enough. They would have watched us for 24 hours, you know?
Yeah, yeah. The well, because the Bitcoin was crashing and anything could happen. These days, Bitcoin still crash, but maybe we'll do a Bitcoin crash special someday.
Yeah. Well, I was thinking that the retail investors now are kind of all out of money. They've been buying the dip and then they've been buying the dip of the dip,
Yeah,
and
yeah.
they're sort of the next phase of the bull run, if the bull run continues, is going to be more like the smart money, the people that took some profits. They're waiting for a good reentry point. Like all the Moon Boys and the Lambo people are kind of already in. They're out of money. They got to go work it. They got to do your plan C. If you guys didn't see Pablo's video yesterday, he said that he was talking about how plan B was wrong, and Pablo is of course plan A, as we know. He's been the most accurate influencer so far, but plan C is McDonald's. Like, you got to go back to work at McDonald's to get your money so you can buy the
Show you
coin.
that's plan B, and that's plan C. Pablo's plan A. So there you go.
So let's take a poll in the chat. You guys put a B, or C in the chat. Who are you listening to? Are you listening to Pablo plan A, plan B, of course, or are you just going to go to plan C and go? There's nothing wrong with flipping burgers. I mean, that's one of the things that young people have on their side is like, look, if you're 18 or 20 and you went like all in 100x leverage on crypto and you lost it all away, well, you've got enough time. You can make your money back, no problem.
Unless you go all in on ohm forks, on ohm or ohm forks. Now look, I better not kid around. These are Ponzi schemes in my opinion. So I better clear that up before we get reported here. So but I don't see that. I say that Ponzi schemes necessarily in the negative sense of the word. There can be a neutral sense of the word for the word Ponzi. For those people who are unfamiliar with what OHM is, and what the Wonderland time fork is, are you able to give us a quick rundown, Brian, so that everyone can catch up to speed?
Well, yeah. I mean, so the original projects were they sort of created this yield system, which, first of all, everybody needs to be aware of, that they're measuring the yield in APY. What that means is that those high yields you see only work if you keep your money in for a whole year. And it's kind of like my kids broke open a piñata for the birthday party a couple days ago. And it's like, there's a lot of candy on the ground for the first 5 minutes, but then all the candy's gone after like 5 minutes. So you're not going to get that APY for a whole year because all of the money's gone after the first, few weeks or months. So it's really, really very, very dangerous thing. But the forks
is the APY that is shown, is that locked in if you lock in for 1 year, or does that? Let's say if you actually have the balls to hold it for 1 year, is that APY locked in there?
Well, so a lot. I read the white paper. First of all, a lot of the white papers for those projects are extremely complicated. And whenever something's that complicated, you got to go, But usually they say, we have enough to support this yield for like 3 months. And then they say, well, then what are we going to do? Oh, we're going to do this, this, and this, or this is our plan B or plan C to get it back on track, right? But really, no, they don't have enough to last a year.
They right. So even if you just hodl for 1 year, they own, one is forks, you would not get that APY. That's what you're saying.
You would, they would, the only way to continue it is if it keeps growing and more people come in, right? And that's the definition of a Ponzi. I hate to say it, where you need the next guy's dollars to pay for your bag. And that's why it's different from traditional finance, traditional economics, where you like Apple stock or something. Well, Apple's producing something, right? They're producing iPhones. So there's value being created versus just drawing people.
I see. Yeah, that's a very valid point. So basically, the essentially, I understand it's these ohms and ohm forks. They have very complicated system of how they generate these yields, and I've seen influencers do multiple videos to try to explain it. I thought, it's kind of smart and intelligent that they came up with such a system, but at the end of the day, there's such a thing called the law of gravity, which means basically it can't take off without fuel, right? And that fuel is you guys coming in more and more, buying the next wave and buying the next wave. So basically, um, I think Brian touched on it as well in the last part of what he said. This is how you find out what a Ponzi scheme is. Basically, Ponzi's are by definition things that are what's the word? Um, okay, the dictionary definition of a Ponzi would be something that you cannot buy. It doesn't increase in value until the next person comes in. So basically, this person A pays off person B pays off person C, and it's a pyramid scheme. It's basically, that's what a Ponzi is. It needs a new entrant, a new player to pay for the older players to cash out. That's what a Ponzi is. Now, many things in life are actually Ponzi's, just that we just don't talk of them that way. So I don't see Ponzi necessarily in a negative sense, usually in a negative sense, but not necessarily in a negative sense. So here's the thing. Like, for example, with a Ponzi, like some people would say the US dollar started off as a Ponzi, and now it might be a Ponzi today as well. But for about 150, 200 years in between, for those 200 glorious years, the United States dollar was not a Ponzi. I'll try to explain the difference. And Brian touched upon it when he says it's got to generate, the difference between a Ponzi and a non-Ponzi is that it's going to generate value on its own. So even something that was a Ponzi before may become something that's not a Ponzi and then become a Ponzi again. And we've seen that with the life of the United States dollar. It's would you agree with that statement, Brian?
Yeah. I mean, another example that I thought of is you can compare it to like real estate, where is my real estate a Ponzi scheme? Absolutely, because the only way I can sell it is if someone else comes and pays me more money, right? But the difference is it's sort of like the US dollar. There's scarcity there. There's a limited number of real estate, and there's also necessity there. People need a place to live. If all of a sudden every planet in the universe opened up and they had the best buildings and the best bars and the best everything, then our real estate would be a Ponzi, because there would be no need for it. So yeah, I do agree with US dollar. I mean, now that they're printing more and more and more, it is becoming a Ponzi, and that brings us back to the whole point of why we like crypto in the first place.
So I'm not necessarily discouraging people from joining the ohm forks or the ohm knives or pitchforks or whatever it is. That's all fine. Here's the thing: as long as it's making you money and you understand what it is, then you're not likely to get shafted. You know what I mean? So if you understand what it is, so if we can explain to you what Brian and I are trying to do, if we can explain to you properly what a Ponzi is. So if you understand that, then basically you understand, oh, okay, I got to watch out for these things, and I got to try to make my money and then get out before it all collapses, kind of like Dogecoin or kind of like Shiba Inu. So here's the thing. I don't want to offend anybody here, but you could argue, it's arguable, you could say religions, some of them are Ponzi's as well. The belief in democracy or communism or any form of government can be a Ponzi until it starts producing value. I'll just quickly use the United States dollar to give an example, illustration. So for example, like when George Washington, this nobody guy, he wasn't much of a, he wasn't much of a big shot before the war started. And he said to everyone, we're going to form this new government. We're going to overthrow the king. We're going to start the American Revolutionary War. There's going to be a new country called the United States of America, all this. It's selling hopium. It's kind of like people selling you the hex coin today, or this coin or that coin or whatever. And it's a pure Ponzi, because he cannot take that money and pay himself, his own wife, his soldiers, until new investors come in and pay them with that money. And this would continue for years until the United States government could actually collect taxes and become profitable as an actual entity. So the thing is, of course, America grew stronger and stronger, and the cotton trade, the textile trade with Europe, and the railroads, all that took off. Technology, the opening up of the West, the gold rush, all that generated a lot of income for Americans, and therefore taxation dollars for the U.S. government. And back then they couldn't print; it was all backed by gold. So that means however many U.S. dollars they could issue meant how much gold was actually in reserve in the U.S. Treasury vault. And so therefore the U.S. dollar was growing, but it was backed by real gold generated by the actual economic activities. That's in the United States. And then now we're getting to a stage, yes, there are still lots and lots of value being generated. And Brian touched upon one half of the reason why you could say United States dollar is a bit of a Ponzi today. It's because, yes, they're printing a lot of the debt, but as long as if they're generating enough value to cover the debt, then that's fine. But we all know they're not generating enough value to cover the debt. One, taxation is not enough because the federal budget deficit is at the highest it's ever been, like this last month, and they have to raise the debt ceiling and raise the debt ceiling and raise the debt ceiling. They have to raise that debt ceiling every 2 to 3 months, right? We all know this. So you know what that means. That just means we just have to borrow more, and then we have to borrow more to pay the next guy. That's why it's very obvious why China and a lot of these countries are like, we're not buying any more of these US dollar debt unless we get something good in return, unless we get a geopolitical advantage. So because say if we bought US dollar debt and that money's been paid back to us, well, that's not generated by the actual American economy and taxation dollars paying us back. It's basically saying US will go out and try to sell that debt to more people, to say, I don't know, like Germany or Spain or whoever wants to buy it, and whoever pays that money is given to pay us. And that's why the debt ceiling is being raised and again and again and again. In that definition, you could say even the US dollar is a Ponzi. So not every startup company in the world, before Tesla started actually making cars, making money, it was a Ponzi because it needed new investors' dollars to pay Elon Musk, to pay the engineers to keep them working for 365, 700 days, whatever it is, before that first model was produced, before the first model could start selling and generating money, whatever it is. And so you got to be careful what a Ponzi is. And when you look at things like forks, yes, they could make a lot of money, but just understand it's a Ponzi. And when does a Ponzi break down and realize something that actually has intrinsic value, like Coca-Cola or McDonald's, or that is a Ponzi that could potentially produce value. And the last thing I'll say about these forks is that I don't think they, like Shiba Inu, I don't think they ever have, it's not part of that code. It's not, they would never have a chance of actually generating real value. It just basically depends on more money coming. So in that sense, they're a pure Ponzi.
Yeah, I think you touched on something really important there, and that is that people don't know that these forks are necessarily Ponzi's. If they knew, it would be okay. They would take their initial investment out, they would practice risk management. But like with meme coins, for example, everybody knows it's just fun, it's silly. Nobody's like, oh my gosh, this is what I'm going to do for, to make a real return. The danger, I think, with the forks and Time Wonderland and all that is that they are presented as, hey guys, if you just stake this during the bear market, this is your passive income, this is your financial freedom. And it's literally the worst possible.
They actually stake it during the bear market.
The bear market is the worst possible time to play with that fire, because that's when it's going to collapse.
That's actually the worst time. The worst time to be staking anything. Like I mean, what? Okay, I think you explained this rather well the other day. Like, I know problematic to be staking during a bear market. Um, how would you actually? What was the wording you used to describe the problem of staking during a bear market?
Yeah, I mean, it's staking during a bear market is when you are counting on the staking mechanisms to give you passive income, but those mechanisms are going to break down. You know, a lot of staking, first of all, you have to define what staking is. People use staking as like this blanket term to describe any income they get in crypto. Some of it is validating nodes and being a network validator in crypto, which is really important. Some of it is lending out your crypto, like on Celsius, which actually isn't really staking. It's more true DeFi, decentralized finance. And some of it is getting a little piece of transaction fees in liquidity pools, liquidity pairs, and you're going to get a little piece of that for providing that liquidity pair. Every one of those versions of staking will come under attack in a bear market when people are trading less and the trading volume is smaller and the trading amounts are smaller that you're going to get a percentage of. On Celsius, I mean, there's a lot, you know, I could talk about this for 20 minutes, but people would get bored. But there's a lot of reasons why during a bear market, you know, I'll tell you this, guys. Listen, you guys want influencer honesty? Here you go. I have a group of influencers on a text message, and everybody was like, oh yeah, you know, I'm pulling my profits out to fiat. I'm buying real estate. I'm pulling my, and we were literally, Pablo wasn't in this group, so I can't implicate him for this, but everybody was literally like laughing at the idea of taking all of your hard-earned crypto gains and staking it throughout the bear market. Now, I'm not saying you shouldn't do this with a little bit. Like if you made, you know, $100,000 profit or whatever in the crypto bull run, and you're like, yeah, you know, I want to stake like 10% of that to just make a little passive income. That's fine. But if you're talking about the generational wealth or the money that you're going to use to send your kids to college, the crypto is so risky. I made another video about how a lot of people say this, you know, this just drives me crazy because, you know, people take these stock market phrases that actually work in the stock market and they apply them to crypto. One of them, I just made a video about this on my TikTok account. If you guys aren't following me, go follow me on TikTok too. But one of them is time in the market beats timing the market. Time in the market beats timing the market. And you guys have these crypto people saying this. They're like, time in the market beats timing the market. Well, yeah, but did you guys know that the S&P 500 is a self-cleansing index? That means it's true that time in the market beats timing the market, because over time, the S&P 500 removes the garbage and adds the growth in. That's why there's only ever 500 of them. There's never more than 500. So that actually is true. Time in the market beats timing the market because this thing
So for example, Tesla, correct me if I'm not mistaken, just got added to SP 500 recently. I think it was within the last 12 months, Tesla got added, and its stock price, I remember it was just blowing up, and then people were speculating when it's going to get to the SP 500, because once it gets added, then a lot of fund managers will have to buy it. Because it's part of the index. And as news was coming out and people were speculating on this, it was jumping like 20-30% on the news. And then when SP says, no, not this time, maybe next quarter, and then it just falls. So, but yeah, so just to complement what Brian's saying about the SP 500, these indexes, if a stock dies in there or performs really poorly, they kick them out. And if MicroStrategy, that everyone's familiar with, because it's blown up because of Bitcoin, it's actually part of the Russell 2000, which is small stocks. Now it's getting too big to be in the Russell 2000. There's the SEC or the American Stock Exchange, New York Stock Exchange are saying this is getting ridiculous. We're going to have to remove it out of the Russell 2000 and put it into the SP 500 or something like that. There's moves of removing stocks and adding stocks happening all the time. Yeah. So, go on, please, Brian.
Not really passive investing. It's not really just buy and hold. There is somebody using a criteria to decide what is going to stay in the index. So, you know, I wanted to show you guys this too really quickly. I made a video about this, but I didn't do a good enough job showing the options expiration, just kind of bringing this back to Bitcoin and what's going on with the market right now. you know, we always talk about everybody. You guys are all sick of hearing about this. Oh, the options are expiring. We're going to see a dip, max pain point. But this, if you ever listen to that, this would be the time to listen to it. If there was like 1 month where you tuned into this data, it would be now. And basically what happened, I remember this in the springtime, is that when people were buying their call options for Bitcoin, they all bet on the end of the year. I even did this. I was like, you know, December 31st, that sounds like a good time. Let's just go for that one. So you guys can see this December here is just absolutely stacked with Bitcoin call options. I made a video on this yesterday, but I didn't show this graphic. This graphic is really excellent. The max pain point for this month is about 48 to 50K. I just want to point that out to people because, you know, even though we still might be in a crab market, Bitcoin might be going down, whatever, right now, I really think the reason that we're not able to break above that 50K mark is that this is a massive stack of options here that are going to be flushed out. What's your thoughts on that?
Yeah, it's all about how comparatively large it is. So basically, in May, I think it was early June, there was it was the last weekend. It was like the 27th of May. Remember, 19th of May was the Bitcoin crash to 30K, and then on like something like 26th of May, there was a lot of Bitcoin options expiring, and the option strike price was something like 40, 45, 46, 47K, somewhere around there. And I said, okay, I think that's where Bitcoin prices will head to. And then Bitcoin got to about 42K and didn't go any higher. So it was just shy of that. But remember, that's still pretty good considering that Bitcoin bounced from 30K to get there, to get to 42K. Didn't quite exactly get there. Overall, I would say these kind of numbers work much better for the stock market because in stocks, God, like especially something like Tesla, like you got to understand Tesla is essentially a stock where the tail wags the dog. Like with Tesla, basically the options market is actually larger in trading volume than the actual volume of the stock being traded. There's so much people playing on the Tesla options than Tesla stock price itself. So like the option expiries really can gamma squeeze Tesla prices, which a lot of experts believe is what actually happened when Tesla was shooting through the roof. So, you know, and whereas with Bitcoin, the options market is nowhere near as big as that in terms of percentages compared to its trading volume and the options volume. So what have you got there? You got the puts and calls.
I was just showing that the expiration.
Can I see?
You're hitting on it. Just December 31st.
Can I see the left the y-axis? That's
yeah, it's open interest.
Yeah. It's in millions.
You know, I don't know what the metric is. 29.8K, 129,000.
129,000.
But I think the comparative metric here to the other months is what's really telling, you know.
Yeah, but what I'm saying is it is obviously a very significant day, but overall is it large enough to swing the market? It's right now since Bitcoin where like literally this is right now is Thursday the 30th. You guys in the US have just started your Thursday. That is calculated. It's usually 2 p.m. New York time. So in other words, what time is it in the States right now?
It's about 10 a.m. East Coast time.
10 a.m. 10 a.m. So I think that number usually it expires around 3 p.m. New York time. So which would be a day plus 5 hours from now. So in a day plus 5 hours from now, since we're already at 47K, we're already very close to that number. Then it's a very good chance that we end up at around 48K. 40. Did you say 48 to 50? 48 to 50? Yeah. So somewhere from my memory it was like 47 and a half, 48K. So in my estimation, the 48K area, because we're already so close to it, we're not likely to see big moves above 50K or below 46K or anything like that as it gets close to around 3 p.m. New York time tomorrow, unless we have massive moves in the stock market or massive
economic news coming out. So the thing is, um, that basically, it's how should I put it? This one has a better chance of working out because price is already close. Like back in May, the Bitcoin hit 30K, and you had to get Bitcoin to bounce from 30K up to 46K in order to hit the max pain price. So it was pretty hard. It bounced to about 42, and that's as far as it got. So in this case, I would say it's powerful enough to work. But this discussion is best reserved for, like, say, in 2 years' time, when the options market is really big in Bitcoin, when it gets to be as big as the like the Tesla stock options market, then basically we'll see these option strikes becoming even more meaningful. Yeah.
It's, you guys, I had this conversation with Pablo like maybe a week or two ago, and he was explaining something to me that I never knew. And if you guys don't know this, it's really fascinating that in crypto, a lot of the market, a lot of the price action is driven by speculation, options, leverage. And it's like the tail, what he means by the tail wagging the dog is it's not just like your grandma buying GE stock, where it's like if your grandma buys but your mom sells, there's just a buyer and a seller, and it's market maker, and it's a bid and an ask. There's actually a whole different thing going on behind the scenes here, which some of you who are more sophisticated may already know, but a lot of people don't, that the whole crypto market is the tail wagging the dog of these highly leveraged, highly speculative, risky futures market plays. That's why when, I can't remember if it actually happened, but a few weeks ago when they were talking about banning Binance, canceling Binance, which, by the way, if you guys don't know, Binance is back in Canada. We thought Binance was going to be canceled in Canada, shut down, but just recently they're back on track. And that piece of news, along with some other news, is actually pretty bullish. But that's why everybody's like, oh my gosh, the crypto market might collapse, because when all these futures trading disappears, it actually has bigger impact than you realize.
So what Brian's referring to was this: if you guys are on FTX, if you use that FTX exchange, if you use Binance, you can see this as well. The most obvious one is FTX. So, for example, on FTX, it just shows you what it is. If you type in, you don't even need to look for it. If you type in Shiba Inu right now, like if you SHIB, if you open up your FTX exchange right now, you type in Shiba, you will see that it'll say SHIB/USD. That's the spot contract. And it'll be something like $100 million traded today. But if you were to open up SHIB USDT futures, like perpetual contract, that's the futures contract where you can bet, say, 50x or 100x, it'll say $1.3 billion traded today. And you can find those statistics on Binance as well, but you actually have to open it up and look at what the volume is for the day. And what really dawned on me was when I just searched for SHIB on FTX, it just popped up. It's asking you which one would you select. You trying to find SHIB futures or SHIB, the actual coin itself. So when I looked at that, I thought, gee, now let's look at a few more pairs. And what invariably happens is, especially with the really hot coins like Shiba Inu and Doge Instay, when it's running, the futures trading volume is sometimes up to 10, 20 times larger than the actual trading volume. So what the example I actually used to Brian is this: it's kind of like this spot trading. So there's two trading going on here. There's spot trading, which you think is what's going on, and then there's the futures trading, which you don't see what's going on, but matters a lot more. So it's like this. Spot trading is when you actually buy the Shiba Inu coin, or when you actually buy the Bitcoin. That's the coin you actually buy. The futures trading is just basically like a game, like a bet. It's betting on where SHIB and Bitcoin is going to go, and you can go 100x. Where on Binance you can go as much leverage as 120x to try to make money off that. And what happens is basically this. Again, I'll use one very quick analogy. I said to Brian, imagine your kids and some neighbors' kids are betting each other on a race to the lake. They have to go through the little woods, hop over people's fences to go to the lake. So they bet each other $1. That's because they're kids. That's all they have, and they're along the way they will probably push each other over or trip each other or whatever kids do to try to win that race for $1 for fun. But imagine, Brian, you and I were sitting on the porch and we're two adults and we're like, hey, Brian, I bet your kid loses. And Brian says, no, I bet my kid wins. And I said, oh yeah? I'll bet you $1,000. Brian's like, are you chicken? I'm so confident in my kids. I'll bet you $100,000. I'm like, chicken? Who's chicken? I'll bet you $1 million. So imagine this: you've got two kids who are running to try to get to the lake, from their house to the lake, and they're betting each other $1 each, right? And then you've got two adults betting on those kids, putting in significantly more. Let's say $1 million each to make this example work. So then you can think what kind of race this is going to be. If there were no outside bettors, adult bettors who are much heavier bettors, then it'd be just two kids playing around. They might push each other. They might try to trip each other. They might like push a little cart in each other's way to try to block each other and try to whatever, right? Or they might try to jump the starting gun. But when there are adults involved who are watching this race and they have bet each other $1 million each on which kid is going to win, then some really shady stuff's going to happen. They could drive up and kidnap the kid, right, and hold the kid back for like 10 minutes whilst the other kid keep on running. They could drive along, open up the door and say, hey, Brian's son, jump in, just grab him, put him in the car, and then step on the accelerator and drive to the lake. Anything can happen. Do you see what I mean? So how does this relate back to crypto? Well, what happens is sometimes you see that there are so much futures. For example, what happened? Why was there a crash down to 42K? A month ago, because when prices got to 53K, so many people thought, okay, this must be the bottom. This must be the bottom. There's no way it breaks 53K. There's so much betting that there are so many people going long, and very few people thought, oh, it's going to go through 53K and then drop into the 40s, that there were maybe this little bit of people betting shorting, and this much people, like say, maybe 10, 20, 30 times more people going long at 53K. Now, the exchanges then had to get involved, because who takes the other side of the trade has to be the exchange. Because if so many people are going long, some people need to go short. So the exchanges come in and they basically say, okay, we'll have to go short here. And if prices were to rebound from 53K, then we're going to be screwed. We're going to be like majorly screwed, because we're taking on 80-90% of the market here. So they had to crash the price basically below 53 and go all the way down, so they can take out all the longs down there. It's called what they call a long squeeze, and that's why you see it goes down to 42 and never goes there again. Boom, back up to 48,000 in 1 hour. What's happening there is exactly what's happening like in that kids race. It's forces betting on involved that are much bigger, betting money that's much bigger than what's actually in the race, getting involved to influence the results of the race itself. Anyways, I hope that can help you guys understand what is actually happening with Tesla, what is actually happening with Bitcoin and crypto markets.
That's helped me understand it tremendously. That's a really, really, really good analogy. So a lot of people are asking about cherry networks. I wanted to touch on that recently. Me and Pablo have invested in cherry networks, and a lot of people are excited about it. The reason people are saying, are you so bullish on cherry? I really am. And one of the reasons is that the race for layer one dominance is still in play, right? Like, I mean, we have Solana, Avalanche. I mean, I can name all of them. You guys already know what they are, and nobody really knows who's going to win. So as soon as a new layer one comes on the block, shows up and says, hey, look at me, I've got this this advantage that no one else has really done before, it's going to get some traction, and probably for a long time. And these guys are doing something really innovative Cherry networks. Basically what they're doing is not only are they a layer 1, but they're offering sort of a decentralized file storage infrastructure that companies who want to build on the blockchain can actually come and launch their token on this blockchain, but also use the storage infrastructure to store their files and deploy their websites and keep their, kind of their company moving forward. So for those of you who are asking about Cherry Network, it is very bullish, and not financial advice, but the market's down right now. It might be something to talk to your financial planner about an entry point. But yeah, still very bullish on Cherry, and like I said, me and Pablo are investors in that.
Yeah, like folks were asking me about Cherry. They said in my Discord, they were saying, oh, do you think when I named some layer 1 coins to be watching out for this year, like AVAX, like Cadena, Near, or Luna's not really layer 1, but it is in theory. It's built on the Atom blockchain, which I think also has a lot of potential, but it is kind of building the ecosystem. It is the floor on which the ecosystem of the UST financial system is being built. Layer 2s, you have like Matic, and people were asking, well, do you think, why didn't you include CHER, CHER or Cherry in that group of layer 1s? Here's the thing, like, Cherry is so small that its market cap is what, like about 20 mil or something, 15 mil. Cherry is so small right now. Let me see, market cap. It's so small. It's fully diluted market cap. $11 million. It's so small right now that if it's do well, it could go, 100x. Then it would only be $1 billion, right? 100x, and it will still only be $1 billion. You cannot compare Cherry to something like AVAX. AVAX, if it does well, it might 3x from here, right? Cherry could 3x like on one news item coming out, and it can crash 50%, whatever, for whatever reason. It's that you're not comparing kind of the same thing. If you're asking, can Cherry actually get to the level of where AVAX is, where Solana is one day? It has a chance. There's always lots of risks involved. It's starting off on the right foot. It has a chance, but who knows, right? But then again, they're such different investments. AVAX and Solana, yes, they're layer 1s, but they're all like, what is it, $15, $20 billion market cap? If they 3x, it'll be quite amazing. I mean, 3x is seeing AVAX at what? It's AVAX at 120 now. So seeing AVAX at 360, or seeing Solana at $600, something like that. Whereas Cherry, it can 3x, it can 10x, it can do anything. It can go down 50% because it's so small. That's the point I wanted to make.
Right. Yeah, definitely a lot more risk in these smaller caps, but it's just I like to point these opportunities out to people. Hopefully they know that there's risk and that they're small and everything, but it's good to know what you're dealing with, that this project actually has some pretty big potential. So I don't know, you want to close our chat here and talk a little bit about the metaverse? There were two interesting pieces of news on the metaverse that I wanted to bring up. First of all, there's a Metaverse ETF in the works right now from ProShare, is actually pretty amazing. I'll let Pablo talk about that one in a second, but I also wanted to point out.
I was the one I heard from ProShares was that they're creating an ETF for the top 10 NFTs. And did you see that, Brian?
Mm-hmm.
The weighting, I thought the weighting was very interesting. 33% of the ETF would be CryptoPunks. Like 31% would be Bored Ape Yacht Club, and Mutant Ape Yacht Club would be like 8%, and then smaller. I thought this is kind of getting ridiculous because they're gonna have to switch up the top 10 very, very quickly because especially the bottom 6 or bottom 7, it can change just like that. I mean, whenever the floor price fluctuates, they just have to change like that, and it is a bit of a crazy concept. But you said oh, okay. If ProShares is to do, I saw the headline. I'm wondering how I didn't see the actual breakdown of which ones they're going to include, but I'm guessing this. They're probably going to include Facebook, right? Roblox, Minecraft, those ones. That would be, those would be the ones they include into the metaverse, rather than Sandbox. And like, I mean, with Sandbox, its parent company, it's Animoca Brands. Do you, as ProShares is mainly a stocks ETF, do you? I guess they could. I guess they could buy the Animoca Brands stock on the Hong Kong exchange, or they could just buy Sandbox tokens. I guess they could do both.
Yeah, so I see what you're saying, that it's not directly crypto, that this ETF might be stocks. But the thing to
Yeah.
me is, we are looking for what is going to be the next market force that brings more money into the crypto market in general. Crypto market's sitting about $2.5 trillion in total market cap. Well, if we're going to have a huge bull run in 2022 and blow off top, which probably won't happen, but whatever, if we're gonna have this thing get a lot bigger, like people are hoping for it to happen, there's going to have to be a reason for a lot more money to be coming in. And I see that ETF, Metaverse ETF, not necessarily as immediately directly impacting crypto if it's stocks, Metaverse stocks, but it's going to bring this awareness and this desire to get deeper into the Metaverse. And as people figure out, and I'm talking about the general public now, not us crypto guys who know how to use DEXs and centralized exchanges, as the average person downloads the Coinbase app and figures out how to send crypto and gets their mom to loan them, $100,000 of their inheritance early. They're going to be like, oh, I saw this metaverse thing. And it's just to me, it's a trickling down effect of how does the money flow? How are we going to divert more money, from the economy?
Well, first, that's a very good question, Brian. I see two layers to this. One is, the more immediate effect I think can actually have on metaverse coins is a legitimization of metaverse coins. Because what happens is now there's an ETF called, I can't call itself Meta, but maybe METV, METV, whatever it's called, right? And it's traded on the New York Stock Exchange, and that says metaverse has arrived as a concept. It's no longer just Facebook anymore, although Facebook and Microsoft saying, and Disney saying they're going to build metaverses are incredible endorsements. But here's the thing. I highly doubt that they can create an ETF and not use, like, put 90% of that ETF into just Facebook, Roblox, and Minecraft, and some of the largest companies in the world, and just go like 90-80% of that money just goes to Sandbox and Decentraland and Victoria VR. Because here's the thing. We all know this, if the SEC rejected applications from ProShares and from Vanguard and from all those companies to apply for a Bitcoin ETF, and that's a much bigger asset, then why would they agree to them applying for an ETF, which consists of much, much smaller cryptos, right? We all know we only got a futures ETF recently, and that actually marked the market top once again. This is going to be, it's going to be like how could you, I can't believe we couldn't see it. Like, that was the Pico top. We didn't get a Bitcoin ETF, we got a futures ETF. And that's the thing. If they didn't approve of a Bitcoin ETF, which is a lot larger, why would the SEC approve of a crypto ETF made up of much smaller metaverse coins? So I don't think that's going to happen. I think the Metaverse ETF is going to be, if there are any cryptos in it at all, it's going to be small, like 10%, 15%. 85% of it is, like 40% of that index is going to be Facebook. Another 30% of it will be like Microsoft, who said, and another 15% will be Roblox, and then the other 5% will be smaller stocks, and then you have the rest of it being, tiny, cryptos, if at all. So I think that's the direction it's going to go. But the bigger effect is legitimization of the metaverse concept.
Yeah, it's so funny that we're talking about, you just did a very good job of taking the hopium out a little bit and stepping back and being like, well, wait a minute, is this thing actually gonna happen? Is this Metaverse ETF actually gonna happen? And really, if you guys look at Pablo's predictions, I tell this to Pablo when we're just chatting, the two of us, that I think he's been the most accurate person in this bull run. I really do think that. Like, you guys know me, I don't BS, but like, do you guys realize that just 3 weeks ago, like 90% of influencers were saying we're going to have this blow off top? And like, I mean, these guys were saying this like it was fact. One of the guys I follow, I won't name him, poor guy, he's probably in tears right now, but basically he's telling his followers to bet the farm and leverage and long everything. And like, this is like late November, in December this is this, and he's literally like copying and pasting a chart from 2017 and just dragging it over.
Oh, I know that guy.
Literally just let's copy and paste and drag this over. So
thank you, Brian. Thank you for that acknowledgement. Here's the thing, like, I don't think it's funny. They say Mark Twain said, history doesn't repeat itself, but it rhymes. So here's the thing: you cannot, I believe, simply drag and paste 2017 to 2021 bull run and be like, yeah, that's exactly how this RSI, 2-week RSI, that guy loves these 2-week RSI stuff here, and therefore we're up we go. Here's the thing: it doesn't repeat itself, history, but it rhymes. And it's amazing. I think I've shown that chart a number of times. You can see it in being one of my videos. The top of 2017 was when Bitcoin listed as a future to be traded on the Chicago Mercantile Exchange. The April top this year was the exact day when Coinbase listed on NASDAQ, right? And the Pico top about a month ago was almost the exact date, like off by a day or two, when the first Bitcoin futures ETF is listed on the NASDAQ. That is history rhyming itself. That's the pattern that keeps on repeating itself. It's a little bit more complicated than just copy and pasting price. So that to win in the markets, you always got to be just a little bit more, harder thinking, more investigative thinking than 90% of the crowd. Because if you're thinking like 90% of the crowd, they tend to lose. And what I love about that period, Brian, is that just a month ago, everywhere I swiped, other than your videos, of course, I don't think you did that, but everywhere I swiped, every video was essentially started something like this: if you're not in crypto right now, then you gotta be in crypto, because the market is about to go parabolic in the next month. We're about to head to a parabolic December. Oh my God. It's like either they quoted plan B and said it's going to 135K, 100K, 200K, whatever it is. Some of the older, I don't even mean the young guys, and the older, the biggest influencers in crypto were saying $300,000, the Bitcoin will be worth $300,000. The thing is, it's I mean, you remember these ads? You remember those TikTok videos? They were everywhere. It was like, if you're not in crypto right now, you've got to be in crypto, because the entire market is about to go parabolic. This is a chance of a lifetime. The train's about to leave, and all that sort of crap. The thing is, when you miss your target, sure, like I missed my target, right, by 5K. But when you miss your target by 50K or 150K, and you ask people to go all in, people lose money, and that's what happened. It's just
Yeah, so just to give you guys always like to know, like, what trades are we taking? How are we personally playing this? And I'll tell you guys how I played this. All right, maybe you guys can learn something from how I played this. I almost never buy call options. Pablo points out, he's like, hey, people almost always lose on call options. They expire worthless. But this is what I did in the basically middle of November. I was like, look, if I go out and I long the farm on this parabolic top in December, I could get absolutely wrecked, right? I mean, I could just lose everything. So I was like, how can I play this where if Bitcoin really does go to 300K in December, I make a lot of money? How can I do that? But I don't lose very much. I was like, I need to do call options right now. So I bought about $5,000 to $10,000 worth of December 31st call options. Now, did I get wrecked by this? Yes, I did get wrecked.
It was a
However,
small amount.
even looking back on it, it was still the most desirable risk to reward play for me. You guys can understand the dynamics of how this works, because if Bitcoin had gone to 200K, 250K, 300K, my 5 or 10,000 would have turned into, like, I don't remember exactly what it is, don't quote me. It was like 200K. So it would have been like a 20x for me, right? Which would have been great. I would have been celebrating. I would have been like, I played the parabolic top. Look at me, guys. Yeah, you know, I got my money to buy my vacation home now, whatever I want. But if it didn't do that, I lost a manageable amount, you know, less than 1% of my portfolio, whatever. So this is the kind of risky, you know, risk management thinking you need to be aware of, because you absolutely can get destroyed if you don't play this the right way.
Yeah. So basically just to wrap up, because we're coming up in the hour mark, I'd just like to have a quick chat about some of the signals we're seeing in the markets. So for example, like I think Brian posted this chart as well. This is the age band of the coins being spent, which means after they're being mined, or after the last time they were stored into cold storage, how long has it been before they're exchanged again? So this color is basically the 2 to 3 year or 2 to 5 year. And what that means is last time since they were stored, they're now being used again. And that was 2 to 5 years ago. Including, I think this is including 7 years. So this color band. And you can see that each time when you see a spike in these 3-year, 5-year-old coins being spent, right? Market sort of, you know, stops in its tracks. It's been rising, and it goes flat. Rising. And this is January, February this year, and takes like a 20%, 15% dive. And then happened again around August this year, and then we had that crash to 40K. And then we had this crash, this flash here, and it wasn't even a big flash, but it was at 69K, exactly there. It wasn't a strong signal, but you can see that, and that was enough to tilt the markets. And 2 days ago, we had another flash, whilst we're at around 48K. So in general, I think I posted that on my Twitter or somewhere. And certainly my Discord. I would say that in general, it doesn't look great. You want them to be accumulating when the market is here. You don't want them to be you don't want those old coins to be selling whilst you're already down. You're already down 35% from the top. So that's in the medium term, like next 2 to 4 weeks, I would be careful about this. On the other hand, you have people selling hopium, pointing out that, you know, the younger coins, if you go by different measures, you say, look, the younger coins are getting spent. The older coins, the age of the coins getting spent is peaked around here. That was the 69K. When it peaks, it creates these sort of peaks. And right now, it's the age of the coins being spent is getting less and less and less. That just means it's not like old coins were getting spent, even though we saw a spike back there. I mean, it depends on how you look at it. I would just say that we could get, in my estimation, I think we get a small short-term bounce to about 53K, maybe even 57K, 58, and then we head down. When we do head down, it'll be a very interesting situation, because what happens is this. If we look at the the daily chart, we can see that. So this is where Bitcoin is right now. If we get a bounce here to say that's about 53.54, oh sorry, 53.54, and we get about, or get to 57-ish, and we come down again to say 41.42, then you can see it'll be a very classic shoulder, head, shoulder. I don't think we get above 69k this time, not for a while. So shoulder, head, shoulder, and then it'll be a very interesting time when it gets there. The market is going to be split again, just like last time, saying, you know, is it going below 30k or above 30k? And there's going to be a lot of debate. That's where we're going to end up to be. Was the neckline around somewhere around there, around the low 40s. So that'll be an interesting time to watch out for. If you are holding losses, I recommend getting rid of some, selling some when it bounces into the 43k or above area. I don't see the chance of a major rebound and going into 60k and above 69k, whatever, just because of the environment we're in. I mean, everybody's every investment bank in the world is tightening monetary policy. So I don't know, beats me how that could happen.
Well, guys, thanks for hanging out with us for the last hour. I think an hour's about the right time, wouldn't you say?
It's been an hour, yeah.
So we are gonna put this on our YouTube. If you guys missed it or want to go back and watch, you know, some other segments, you guys can subscribe to both of us on YouTube. Pablo's is Pablo Heeman, of course. I just started a new YouTube channel, Brian Ross Crypto. So we hope you guys will check that out, and we will see you next time.